webinar, Tax Made Easy, a simple guide to UAE corporate tax. I am Juvie Sarmiento, CMA, and I'm delighted to be your moderator for this session. We know tax can seem like a complex maze, but in our session today, we hope to simplify it and provide you with the basics in exploring UAE corporate tax. Whether you're an entrepreneur, a financial professional, or just here to be informed, you're in the right place. In this webinar, be prepared to learn how to navigate new tax landscapes, optimize tax strategies, simplify and calculate tax liabilities, and stay compliant with the latest regulations. So, I hope you're all excited to learn, ready to take notes, and don't hesitate to ask questions. You guys are muted upon entry, but please feel free to use the chat box to write in your questions after the discussion. Now, it is my pleasure to introduce to you our speaker. He brings a wealth of experience in the field of audit, tax, business consulting, accounting, and finance with industry exposure in retail, construction, manufacturing, F&B, government agencies, and service industries. He is the co-founder and chairman of MBNA CPAs with over 12 years of experience in the field. In his career, he has made notable engagements such as being the head engagement manager and lead for internal audit review of the government entity for 2 years, lead auditor and manager to a joint venture of Chinese and Korean engineering company for a $3.8 billion project. He also projected and planned a 5-year, $60 million financial projection on a retail company with over 100 branches in the Philippines. He is the leader and engagement manager for audit of multinational companies and corporations in the UAE, and he has handled more than 200 plus multinational companies from different sectors with the intent of going global. He is our distinguished speaker for today, MBNA CPA's very own Mr. Chad Michael Bayonon, CPA, CMA, CSCA, CIA. Let's make taxes less intimidating and let's make them easy. Let's dive into Tax Made Easy, a simple guide to UAE corporate tax. Over to you, Sir Chad.
Hello, good afternoon, everyone. Thank you so much for joining. And with a lot of qualifications and citations, I will be discussing taxation in a simpler way. Okay, so we will not be, just a disclaimer, okay? Just a disclaimer, we will not be discussing into in-depth, because we will be, if ever we will be discussing into in-depth taxation, it will not become easy for all of us. Because, see, to be honest with you, taxation will never be easy. It could be made easier, but it will never be easy. Because there's a lot of documentation and requirements that you need to fill in, even when you're doing the tax filing. But let's try to make it easy, or what would be the things that we need to consider in terms of taxation. Okay, so with that being said, all right, hope you guys could see my screen. Okay, so first things first, what will be the things that we will be discussing for this certain session? Yes, we will be talking about corporate tax. We will be needing to talk about the taxable persons as well. We will be talking about tax rates and key tax adjustments that's there as well. But we will not be talking into in-depth of it, because if ever we do, the 1 hour session will not be enough for this certain kind of topics. But please take note that we will be having more webinars on the go. So please follow us and just be notified with regards to our upcoming sessions. And also, we will be discussing about compliance requirements about taxation, at the same time, how to calculate your taxes as well, and any tax administration that we need to do. So technically, there's a lot of things that we need to talk about corporate tax. Okay? But in a simpler way, how can you try to make corporate tax in a simpler way? What would be the approaches that we need to do in terms of making tax simple? So for us at MBNA, we are actually following RCF approach. Wait, question, what is an RCF approach? So technically, when we talk about corporate tax, there are actually three major stages. First thing is the stage of registration. So you have to understand first whether you need to register for corporate tax, what will be the considerations you will be needing for registration in corporate tax, and if there's any requirements for you to register for corporate tax. So that's the first point. The second point is with regards to compliances. So once you're registered for corporate tax, what would be the next thing that I need to do? So that would be more into the compliances. Compliances part would be, okay, if I will be registered for corporate tax, how do I record my accounting? How do I maintain the books of accounts and all of those things? So that will be your compliances. Okay. The third part is actually more into the filing. So that's the last part. So registration. Okay, I'm registered for corporate tax. Second would be on the compliances part of it. Okay, so I will be making sure that all of the documents that I will be having will be there and in compliance with the corporate tax. And then the third one, the last part of it, which we will be doing for most of you, if ever your company has been incorporated on or before June 30, by June 30, 2023. So you will be needing to file your corporate tax this December 2024. Thank God it was actually extended for the deadline. Supposedly the deadline would be September 2024, but they have extended it to December 31, 2024. Okay, and then so that's the last part of it. That will be the filing for the corporate tax. So what would be the things that we need to consider with regards to the registration? Okay. So when we talk about registration for corporate tax, you need to actually know your business. First things first, you need to know your business. Now, when you're trying to know your business, you have to consider the following. That will be your formation of your business. And you have to consider as well the identification, whether this business will be a natural person or a juridical person. And then third would be the applicable registration rule and the timeline for you to register for corporate tax. Okay. So first thing, okay, how do I know about my business? What would be the formation of my business? So technically, here in the United Arab Emirates, you will be able to know the formation of your business through understanding you doing your license check. Have you seen any of your licenses for your companies? So please take note that in your license, you will be able to see what is the formation of your business. Why is it relevant for you to know the formation of your business? It is actually needed for you to be able to understand whether your business is actually a natural person or a juridical person. Okay, so here, these are the example of the licenses that has been issued in the UAE. So here, for example, for an economic license of UAE Abu Dhabi, you'll be able to see from here a legal form. It will be showing here what is the legal form of your company. We have the sole proprietorship LLC, and then we have the limited liability, we have the establishment and all of those stuff. And then we have here a sample as well from Dubai, and we have a sample as well from Abu Dhabi Global Market or from the ADGM or Free Zone. Okay. Chad, I know already the formation of my company. I know already that my company is actually an LLC or establishment. Now, what would be the next thing that I need to do? Make it simple. Now you know the formation of your business. Now the next thing that we need to do is actually to identify whether this business formation of that we do have is actually a natural person or a juridical person. Chad, why is it necessary for me to identify whether my business is a natural person and a juridical person? What is the certain terms that you're talking about? Okay, when you say natural person, it's actually a human living being. Okay, that's a natural person. And then when you say about juridical person, it is actually a legal person by operation of law. Okay, so when I'm a natural person, then what will be the things that I will be doing? Okay, first things first, you have to identify whether you're a natural person or a juridical person, right? Now, in the formation of your business, you will be able to see from there if ever your business is having a license of establishment or a civil company that is considered as a natural person. Normally, a natural person business will be having unlimited liabilities. They will be liable up to their personal assets. Okay, what's the point of having this verification, whether I'm a natural person or a juridical person? This would be necessary for you to make sure whether you will be needing to do the registration or not. Okay, and this includes as well some exempt persons, so please take note of that. So the consideration only for the meantime that we will be discussing is on the natural person and the juridical person. So whenever you are a natural person, the applicable registration rule for you would be if ever you exceed 1 million revenue, then that's the time you will be needing to register for corporate tax. But if ever you do not exceed the revenue of 1 million, there's no need for you to register for corporate tax. Why is that? The reason being for this one is since natural person is actually a resident here in the United Arab Emirates, and the focus of the law for the taxation is more into the corporate tax or the corporations. So that's the reason why most of the businesses under the natural person, which is having the capability of running the business here, but is having a low income as a support for the SMEs as well. That's the reason why they have a limitation of their revenue. So that's the reason why the revenue requirement for their registration would be 1 million for the natural person. Now, next question, Chad. If I would be considering my company as a juridical person, would I be needing to register for corporate tax? Definitely. 100% you need to register for corporate tax if you're a juridical person. Now, juridical person will be having an LLC. You have your limited liability company. You have your sole proprietorship LLC. You have your free zone companies, and you have your PSGC or PGSC, private stock joint company or public stock joint companies as well. Okay, so that's the consideration in terms of natural person and juridical person. Now, for the exempt persons, who are those exempt persons? So the exempt persons that we do have is actually the government and government controlled entities. Any businesses engaged in extractive business and non-extractive business, which is related to oils and all of those stuff. And then we have the qualified public benefit entities, the qualifying investment funds, and then regulated public and private pension and social security funds, and any entities incorporated in the UAE wholly owned and controlled by certain types of exempt persons, which is this type of persons as well. Okay, so what will be the applicable registration rule for this type of persons? For juridical person, you need to register now. There is actually a timeline that has been provided, but as long as you identify yourself as a juridical person, you need to do the registration as soon as possible. And once you do the registration, please take note of your information of your company. When I say information of your company, that will be your taxable person details as well. So please make sure that that will be filled in correctly as well. Okay. For the natural person, as what I have mentioned earlier, the turnover requirement for you to register for corporate tax is actually 1 million. That's for the Gregorian calendar. So the question is, if ever I'm a natural person, my license is establishment license. And for the first quarter, I have exceeded 1 million already of my turnover. Should I register for corporate tax now? And if I delay my registration, would I be having some penalties? In terms of penalties, no, you will not be having the penalties because the requirement of the law is actually to make you register for corporate tax if your turnover for the Gregorian calendar is 1 million. So the rule there is after 3 months, if you're a natural resident person here in the UAE, then you will be registering on March 31. That's the deadline. But we encourage you because there's no exemption as well that you will be registering for corporate tax. So you could do as well the registration for corporate tax. But please take note of your exempt incomes. Because sometimes natural person will be thinking as well that all of their incomes will be considered as part of the turnover of 1 million. Say, for example, the person is also having their income for wages or salaries, and then they will be having another employment income with other companies as well. So they will be considering this one as part of their turnover. Okay, that's a good question. We have a question here. What if my company is a civil company? Which category is it? The category of your civil company is a natural person. Okay, civil companies, establishments are considered as a natural person. Why? For civil companies, actually, the reason being that it was considered as a natural person is because of its liability. The liability of your company is actually up to the point of the partners. So that's the reason why for you, you will be considered as a natural person. Okay, going back. So for the wages and other employment income, that will be exempt for the calculation of your turnover. So that would not be added there. For your personal investment income, possibly you have an investment in maybe some sort of dividends that you have received and all of those stuff, or any other personal investments that is not considered as taxable in nature. Let's say you are maybe doing some trading and all of those stuff. So yeah, our license is a professional license. So liability. See, you have to check as well for your professional license if the formation of your professional license is a civil company. The formation, you have to check first the formation. Even if you have been issued a professional license, you have to check on below the formation of your business. If it is an LLC, then it will be considered as a juridical person. But if it is a civil company, it will be considered as a natural person. Yes. So the legal type is civil company, so it will be considered as natural person. Okay. So regardless of what type of license was issued to you, you have to check what is the form. Going back here. Okay. So here. So this is actually an economic license. This is a commercial license. This is a commercial license. There are some cases that you will be provided with a professional license. If it is a professional license here, you have to check your legal form. It doesn't not matter if you have professional license or economic license, that's part of the commercial activities only. But you have to go and check your legal form of your company. Now, if your legal form of your company is a civil company or establishment, then technically you are considered as a natural person. But if ever your legal company here is an LLC, then you are considered as a juridical person. Okay? So for your personal investment income, that is not included. For real estate investment income as well, that will be exempt for the calculation. So if you're a natural person. But if you're a juridical person, technically, since you are a juridical person, that will be included as part of the your turnover as well. Okay? So, okay. Now I know the formation of my business. I'm I have identified already whether I'm a juridical person or a natural person. Now, what would I do next? In this case, if ever you have been able to identify your company, whether you're a juridical person or a natural person, then the next thing that you need to do is actually to do the registration directly if you're a juridical person, but please take note of the timeline as well. And then for the natural person, you have to do the registration once you reach the turnover of 1 million for the Gregorian calendar. Or you could do the registration immediately if ever you wanted to do the registration. Okay, but the encouraged ones are actually the juridical persons. Okay, so as a consideration for your timeline for registration, for the juridical person, as what I have mentioned earlier, it will be required the soonest for you to do the registration. But if ever you just recently opened your company, so the requirement for you is actually to register for the corporate tax 3 months from the date of your incorporation. So 3 months from the date of your incorporation. And there is also some timeline rule that has been provided by the FDA for the incorporation date or issuance date of your company's license. So there's a list of requirement already. So I'm pretty sure you guys have gone through with those lists. So I will not be including it here. But as part of the highlight of companies who just recently opened their business, they need to do the registration 3 months from the date of the incorporation. Because actually, we have an experience with one client who just opened their company last April. And 3 months after, and 4 months after, 5 months after, they really thought that they don't need to do the registration because their license issuance was actually on April, so they need to register only maybe I think June, right? Yeah, June. So in that case, there it is within the 3 month period, but they have a consideration that because I'm just a company who just recently opened, I don't need to register for corporate tax. That's a wrong perception. And the requirement for you is actually if ever you have identified yourself as a juridical person, you need to register as soon as possible. And the requirement for you is 3 months from the date of your incorporation if you are incorporated within the year 2024. Okay. Now for the natural person, there's a good thing as well for them. Yeah, so in general, all business need to register. Yes, in general, all businesses need to register for corporate tax. But you have to consider as well of what is the person that you are, whether you are a juridical person or a natural person. Because even though you have conducted business for a natural person, this is a good thing for them as well. There's a good side and bad side for natural person. See, if you have registered your company as establishment and then you are considered as natural person, and for your turnover for the Gregorian calendar year is less than 1 million, there's no need for you to do the registration. Okay, I have an accountant bookkeeper based in Dubai who should do this for me, right? For the rules with regards to the accountant, it actually depends. We'll be having this one discussed maybe in the Q&A portion, but it depends on the agreement that you do have with them. Okay, so for the natural person, the benefit of them is actually having the registration maybe on later date if ever they have exceeded the turnover of 1 million. So that's a good thing about the natural person. Okay, now if ever the natural person is non-resident, meaning they have been staying abroad, but they have some businesses here or some income here, then they need to register for corporate tax 3 months from the date of fulfilling the condition of 1 million. So say for example, earlier, the example that we do have is on the first quarter, they have exceeded 1 million. So if you are a natural person and you are a non-resident natural person, then you need to register. After the first quarter, you need to register within that certain 3 months, or after 3 months that you have exceeded the 1 million, you need to register for the corporate tax. Okay, so we're clear with that. So I think everyone is now registered for corporate tax, I believe. Right, so we're clear with that. We're clear with the registration. So that's the first thing that you need to understand in terms of corporate tax, whether I would be registering for corporate tax or not, and whether I am considered as a juridical person or a natural person. Now, the next thing that you need to do is actually considering your compliance. So, what are the compliance considerations that I will be having for my business? In a simple way, you need two things. Two things only: documentation and maintaining the documents. When you say documentation, how you will be able to keep all of the files and what will be the files that you will be needing to provide with the corporate tax or to comply with corporate tax. Second, how do I maintain these files? So that's the second question. How do I maintain the files or the documents for corporate tax? Now, in a simple approach, when we say documentation, the first thing you have to consider is how do you do your bookkeeping? When you say bookkeeping, all of your transactions have been kept in what place? So normally, for most of our clients, we have provided them the best or the easy step for you to comply with the documentation is to have at least an accounting software for you, or at least a proper process of bookkeeping for you to be able to comply with corporate tax. What's the reason behind this bookkeeping requirement? Because technically, whenever you file for corporate tax, you will be needing to provide these documents. One major requirement for them is actually for you to provide the financial statements. Now, the question is, I'm an SME. I don't have proper bookkeeping. So why would the government ask for the financial statements? Technically, these are the requirements for them to be able to assess your company. Okay, so you need to make sure that you have a proper financial statement in place. So that's the reason why you need to have a proper documentation as part of your bookkeeping. Okay, now when you do the accounting of your transactions, the consideration is whether you follow cash basis accounting, IFRS for SMEs, or full IFRS. What's the purpose of this? So technically, if ever your business does not exceed 3 million as part of its revenue, so you just follow the cash basis accounting. Now, in terms of cash basis accounting, what you need to do from there is you just have to record the money in coming with you and the money out from your pocket. So that's it only. That's the simplest way to account your company's income and expenses. If there's money coming in with you, that will be recorded as a revenue. If it is going out from your pocket, that will be considered as an expenses. So that could be accepted if ever your revenue is not exceeding 3 million. But what if my revenue is exceeding, we have a question here, hi Chad, when you say 1 million turnover in a year financial, is it the same thing as a gross receipts? Yes, it is considered as a gross receipts for you. So technically, all of the revenues that you do have, all that you have received. But if ever you are a VAT registered person, that will be considered as net of VAT. Okay, so net of VAT of your revenue. Okay, so the consideration in terms of your accounting would be your if ever you have exceeded 3 million, so the consideration for you is to follow the IFRS for SMEs. So what's the difference between IFRS for SMEs and cash basis accounting? When we say IFRS for SMEs, you will be doing an accrual basis. So what is this accrual term that we are talking about? When we say accrual basis, that will be a consideration on recording your expenses when you have incurred rather than having it paid. So say for example, on that certain month, let's say for the year of 2024, you have incurred an expenses of, like, let's say you purchased self you purchase materials for your business. So, and then for this certain materials, you have made the payment of these materials on the next year 2025. So in this case, whenever you are following IFRS for SMEs, an accrual basis of it would be recording such expenses on the year 2024, because that's the year that you have incurred this certain expenses, rather than recognizing it on the year 2025. So in cash basis accounting, you will be considering it as an expense of year 2025. In IFRS for SMEs, you will be considering it on the year 2024. So it's only a time difference recognition of your expenses or your revenues as well. Okay, so that's the difference between your cash basis and your IFRS for SMEs. Now, if ever you're following full IFRS, if ever you exceed more than 50 million, then you need to follow the full IFRS. What's the difference between IFRS for SMEs and full IFRS? There's actually a lot of considerations, but one of the differences that they do have is actually for IFRS for SMEs, it is a simplified way. And for full IFRS, it is actually a bit complicated in terms of following the standards that has been provided by the IFRS. Okay, so part of your documentation is your bookkeeping, making sure that your documents are properly kept. And then next would be your accounting. So when you do the accounting, there are actually three options for you. If you exceed 3 million, then you need to follow IFRS for SMEs. But if ever you did not exceed 3 million, then you could follow cash basis accounting. Now, if you exceed 50 million, then you will be needing to register for, you will be needing to follow the full IFRS, and you will be needing to have an external audit. Okay. As part of your documentation as well, see, the major ones are just two, bookkeeping and then accounting. The third one is actually a consideration of your schedules that will be needed. Aside from your financial statements, which will be taken from your bookkeeping and accounting, there is also a requirement of audit, but audit requirement is only for companies who have exceeded 50 million. Okay? If ever it does not exceed 50 million, so there's no need for you to have the audited financial statements. Okay? So other schedules that you will be needing would be your transfer pricing documentation. Now, there's actually a question for transfer pricing documentation. Question normally that we have received is, my business owner, we are actually an LLC company. My business owner wanted to recognize their expenses in the books of accounts? Would it be possible for me to recognize that one in the corporate tax as part of my expenses? Because technically, the business owners are actually working with the company. Would I be needing to, or would I be able to recognize this one as part of my expenses? The answer is yes, you could, but you need to do a proper documentation. That person, if ever they are part of the license, or they are connected to the persons who are part of the license, that is considered as a natural person. Connected person. When we say connected person, you could actually consider their expenses or your expenses with them as part of your deductible expenses, but you need to have a proper documentation of a market study. If they are working with you, a market study of how much would be the market salary for this kind of profiles that they do have. So that's a consideration. If ever you wanted to recognize an expense for your managerial remuneration or management fees, you could do that, but you need to have a proper documentation. So that's one of the consideration for your transfer pricing documentation. And aside from that, you will be needing as well to consider some related party transactions. And part of the related party transactions are the understanding of how the transfer pricing has been considered for each of your companies if there will be related parties. Okay? And then evidence for foreign tax credit, if ever you have foreign incomes and then you have been able to receive tax credit for each of those incomes that you derive from outside of the country, outside of UAE, then you need to have a proper documentation of it. You need to do some evidence documentation because that will be required as well whenever you do the filing. And we have as well the free zone related schedules. So for the free zone related schedules, we will be having this one as a separate presentation and separate more into a discussion of technical discussion for the free zone. So that we will be having it on a next webinar that we will be having soon. Okay, so as part of a simplified way, you need to have a consideration of your documentation, and major requirement for you to be able to properly document your transactions will be your bookkeeping and your making sure the recognition in terms of your accounting. And then we will be having the schedules that will be generated from these two major actions. Okay, so Chad, I am already registered for corporate tax. I already know that I am a juridical person or a natural person. And then I have already considered the requirement for me to do the compliances, which I will be needing to do a proper bookkeeping and accounting as well. So what will be the next step that I will be needing to do in terms of compliances? So yes, you have your proper bookkeeping. Yes, you have your accounting. Yes, you have your schedules as well. The next thing that you need to do is actually to maintain your documents or to properly maintain your documents. How are you going to do that? So as part of your requirements to make sure that you will be able to maintain your documents is actually, first thing, you need to consider that your recording or your record keepings will be maintained by you for the period of 7 years. So say for example, for the year 2024, the maintenance of your books will be needed for you to maintain until 2031. So that will be the timeline. Now, whenever you do the bookkeeping, all of these documents will be kept for 7 years. Now, there are actually some cases that your invoices will be tearing apart, right? And how will you be able to document this certain transactions? So basically, what you need to do is actually to make sure that you have a scanned copy of it. Okay, for all of these files, and you have to maintain it for 7 years. Now, okay, so that will be considered. Whenever I do the bookkeeping, I will be able to record or keep the books for 7 years. That will be fine. The next thing that we need to do is actually to consider your chart of accounts. In terms of accounting, you have to relook into your chart of accounts. Oh wait, what is this chart of accounts that I'm talking about? So technically, the chart of accounts should be considering the expenses that is subject for adjustments. The law states for corporate taxes, if ever you have expenses fully utilized or expense for the company's business, then you will be able to consider this one as a deductible expense. But please take note that there are actually adjustments for it. So for those adjustments, what we do recommend is you have to maintain a chart of accounts for those expenses that is subject for adjustments. Why? For you to be able to measure and to properly consider the adjustments accordingly. Say, for example, for entertainment expenses, the maximum expense that you could actually deduct from there is only 50%. So you have to maintain a separate books or a separate chart of accounts that will be maintaining your entertainment expenses. For your interest expense as well, there is a cap. So for your interest expense, you need to consider as well a separate chart of account of it. Okay? So as part of that, for each of your transactions, you have to make sure that there is a supporting invoices or proofs of payment. So that will be needed by you to be there on your transaction recordings. Now, okay, Chad, I have already considered all of the expenses which is having some adjustments in my chart of accounts, and able to um, I have been able to document all of the proofs of payments that I do have for deductible expenses and even for the invoices that I have issued as well. Now, what will be the next thing that I will be needing to do? If ever you wanted to consider an expense recognition, as what we have discussed earlier, an expense recognition for a related party or a connected person, you have to make a market study. And this market study should be maintained. But this market study might not be available in your books of accounts. Because normally you will be recording on your books of accounts the payment proof that you have transferred money to the certain connected person, but the requirement for the UAE corporate tax is actually for you to maintain or to provide market study of that certain connected person. Because if ever you will not be able to document and it will not be accepted by the FTA, so this certain expense that you do have for your connected person will be considered as non-deductible expense, and it will become an adjustment for your taxable income. Okay, so this includes as well for your related party documentation. So if ever FTA will be able to identify that this is your related party that you have some expense with, and then during the verification, this related party is all doesn't have any proper documentation, there might be a possibility that this certain related party expenses will not be a deductible expenses and will be adjusted to your taxable income. Okay, so that's the consideration in terms of making it compliant for corporate tax. Okay, so the next thing that we need to understand is actually more into, so we're actually okay. We already understand the registration requirement. We already understand what will be the compliance things that I will be doing. The next thing is actually doing the filing. Now, what would be the considerations that I will be having for filing of corporate tax? So technically, the requirement for you to file the corporate tax is actually, there is a voluminous requirements when you do the filing. And normally, for business owners, it might be a bit tedious for them to do directly their filing. So first suggestion that I do have is actually to consider on passing the filing to a person who is knowledgeable about taxes or knowledgeable about accounting as well, because they would be able to provide complete and necessary information for corporate tax. Why? Because actually, when you do the filing for corporate tax, there is what we call as elections. Elections of your corporate tax filing is a bit crucial. Because if you elected a basis and you wanted to change it thereafter, it might be a bit difficult for you. Because technically, when we talk about corporate tax rules, you need to be consistent of what you choose as part of your election. So if you have done some election and it was elected wrongfully, then it might be an issue. So you will be needing to do some application to redo some election and all of those stuff. So it might be taking some time. So the consideration for your filing would be this would be one of the, you could consider that these are the summary of all of the requirements needed when you're doing the filing. So first thing is actually the taxable person details. So we have discussed this earlier. The taxable details, person details will be your formation of your company, who is the ultimate beneficiary owner, the owner of the company, the signatory, the identification as well, whether you are a natural person or a juridical person. Those are needed here in your taxable person details. Now, here in this election, it might be a bit tricky because if ever you do this and there will be some adjustments thereafter, then it will be having some issues with you because you need to send an email or letter to the FTA to make some adjustments. And then for the tax computation, I'm pretty sure you guys already knew how to compute for your corporate tax, right? You already knew, right? How much was the taxes that you need to pay? How much was the tax rate? You could use the chat box. Let me check if ever you guys are listening to me. Hello? You could use the chat box. How much is the tax rate? The tax rate is actually 9%. And 0% for the first 375 and 9% for the exceeding 375,000. So that's the tax computation. And then if ever there will be some adjustments, that will be considered as part of your tax computation as well. So you have first your accounting income, then the adjustments, the tax adjustments, then you will be able to come up with your taxable income. And then for your first 375,000, that will be 0%, and then 9% in excess of 375,000. So the next thing is actually there will be a requirement for tax return schedules. One of the requirement for your tax return schedules is the one that we have discussed here. This one, sorry, this one, your financial statements, that will be a requirement for you for your tax schedules. Second will be if ever you have transfer pricing documentation, you have your local file and your master file. So that will be needed as well. We could discuss this one on the later stage, but to make it seem clear, this will be one of the documentation that you need to do for your transfer pricing. And then if ever you do have any foreign tax credit, that will be part of your schedules, and then your free zone related schedules as well. And please take note that when you do the filing, there will be a requirement for you to provide an information for your fixed assets, because depreciation will be considered as um, part of your expenses. So they will be needing to get an information of those fixed asset or capitalizable expenditures. Okay, so that's part of your tax return schedule. And then required documents, we have earlier for the connected person, and then for the related party transactions, that will be part of the requirements for your required documents. And also, you will be needing to have your external audit if ever you exceeded 50 million revenue. Okay, But please take note, financial statements is actually required for you to be uploaded or be added in your tax return. Okay, so please make sure that you have the proper books of accounts maintained. Okay, so these are the elections that is available. So we have the realization basis. So normally for realization basis, these are actually these are the incomes that you have for example, maybe you have an asset held for sale, let's say investment and stocks. It's a example. Or let's say um you have some inventories that has a holding period that if ever you will be maintaining it for a longer period of time, then its value will be increasing. So there are some cases that you will be needing to recognize the revenue of it when it will be increasing its value. Say for example, you buy it right now for an amount of 1,000. And at the end of the year, this certain asset that you have purchased have increased its value and it becomes 2,500. Say, so you have an income of 1,500, but this certain asset has not been sold yet. So in your books of accounts, normally the recognition of this one will be an income, an added value to your asset, and it will be considered as a part of your taxable income for if ever you choose that you will be recognizing the unrealized gain and loss for the certain asset. But if ever you will be choosing a realization basis, the recognition of that certain income will be recognized only when this certain asset that you have been holding would be sold to external parties. So that's the time you will be recognizing the revenue and it will be considered as part of your taxable income. So that's one of the adjustments. And this election, please take note that once you do this election, it will not be revocable, but it could be if you will be and you will be needing to support and provide the documentations required for it with the FDA. So that's the reason why whenever you do the filing, you have to make sure that you knew this certain elections as well. So for transitional rules, this is actually for pre-zone companies. We will be having a separate presentation for that and separate webinar as well. And then we have the small business relief for the companies or businesses who had a revenue of less than 3 million. So you could opt the small business relief and you will not be able to pay taxes until 2026. Okay. And then we have this transfers within the qualifying group. This is for pre-zone as well. Business restructuring relief. This would be for the pre-zone. And then foreign permanent establishment. This is for companies who had a presence from the outside. And for example, maybe a branch of another companies on another country. So that's a consideration for your permanent establishment. So if ever you will be having this election, then the income derived from the outside of the UAE will not be considered as part of the taxes. Okay, so that's it. That's a simplest approach. And please take note that this is only a simple discussion, making it simpler. But if ever we wanted to have an advanced discussion of this UAE corporate tax, we will be having another session. And in that certain session, we will be discussing about the pure calculation, the other considerations in terms of the corporate tax. So stay tuned with our social media pages, and you will be able to receive most of our updates from there. Okay, so over to you, Julie.
Okay, thank you, Sir Chad, for simplifying such elaborate topic And as mentioned by Sir Chad, tax is never easy, but that doesn't mean we can't make it easier. So everyone, I hope you won't forget the simple approach to corporate tax, and that is to always remember your RCFs, registration, compliance, and filing. Now, if you were late in entering the webinar, don't worry because after the session, we will be sending you the presentation materials. So kindly check your emails. Question and answer is now open. If you have questions, kindly comment them on the chat box and I will be reading them. And they will be answered by Mr. Bayonon.
All right, any questions, clarifications? It's only a simplified one. Okay. Tax exemption. Okay. So for the tax exemptions, normally, one of the tax exemptions you do have, there will be two options, okay? You have your tax exemption for the income and you have your non-deductible expenses. So for the tax exemption and your income, for the dividend, one of the examples of it will be your dividends. So if ever you receive dividends from a UAE company, you will not be taxed for that certain income. Okay. So that's a good thing. For other small business relief, if ever your revenue is less than 3 million, then you will be you see when you do the filing for a small business relief, what you need to do is actually to make sure that your revenue is less than 3 million and you are not part of multinational entities. And once you're okay with it, you could actually you need first to register for corporate tax and you choose or elect the small business relief, and this would be available for you until 2026. For small business relief, normally you will not be paying taxes. Okay, so consideration first, your revenue is less than 3 million and you're not part of any multinational entities. Hope that's clear. We have some questions here, Joe. Small business relief. Okay. Let's say one of our incorporators will buy in Dubai, but has nothing to do with the trade license, then there is no way that that investment is taxable. See, if ever it is a buying of shares of the company, then that would not be considered as a taxable transaction because it is actually a transfer of ownership. So if ever your incorporators will be selling their shares of stocks to another person, then the consideration is that certain transaction will not be a taxable transaction. Okay. Okay. A real property. Is it an immovable property? So if ever it is an immovable property, then considered as a natural person, then it will not be taxable. It will be exempt. So it will be considered as an investment in real estate. But if ever it is a property bought under a company and it was managed under that certain company, then it will be another consideration. That might be considered as part of your taxable income. Please take note of that. So that's the benefit of identifying whether your company is a juridical person or a natural person. Because if ever it is a juridical person and they have been managing the real estate, then that certain income in the real estate will be considered as a taxable income. But if ever you are a natural person and you have a real estate, and then in that case, your real estate income will be exempt or not included as part of your core taxable income. Okay, so hopefully that has been clear, and I think we ran out of time. So our timing is only from 12 to 1. So I hope you guys have learned something for our discussion. I know it's a small time only, but we'll be trying to provide you session by session. This session is only a simplified session. So for those who have a full knowledge of taxes, it might be disappointing for you guys, but I'm pretty sure on the next webinars that we will be having a lot to discuss. Yeah. So thank you so much. And if ever you do have any questions, clarifications, you could follow us on our LinkedIn page, Facebook page, and we are very active, so we could actually respond from there for most of your questions. Okay. All right. So thank you so much, everyone. And I hope you guys had some learning for today, and have a nice day.